What's up, you guys? Welcome back to the channel. Now in today's video, I'm going to go over why NIO is actually trading up today and why they spiked up so much in pre-market. And I'm also going to give my price prediction for NIO at the end of the video. So make sure you guys stick around to the end to see what my price prediction is on NIO. But before we actually get into the video, for those of you who are new, my name is Evan and I make videos that show you guys different ways to make money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now with that out of the way, taking a look at NIO's share price today, they were actually up over 8% in pre-market trading. Now of course you can see since then they've actually pulled down and they actually were almost neutral at one point today. And they are starting to level off here right around $39 to $40. But pre-market they were actually up to $42. And this is on a couple pieces of news. And one of the larger things being the deliveries that NIO has actually put out, and it actually exceeded expectations. And so I'm going to go over the exact numbers and what we were actually expecting from NIO and how it actually surpassed expectations. But before we do take a look at the numbers, if we actually look at the 1 week chart on NIO, you can actually see that they're trending upwards. And if you guys have been watching NIO, or if you have them in your portfolio, you know that lately in the last month or two, especially since the beginning of the year, NIO and a lot of these other EV companies have really seen a constant downwards trend. So it's good to finally see them starting to creep back upwards. And I'm sure you guys are also aware of Tesla. And Tesla really does lead the market when it comes to EV companies. And because Tesla's been so affected, of course we see this reflected in a lot of smaller EV stocks as well, just like NIO. But with NIO being up almost 12% on the week, it looks like they are finally starting to recover. And you can really see how crazy they've been when we look at the 1 month chart. And they were actually down to a low of about $34. And then they went all the way up to a high of about $46. So this past month has been very rough for NIO, and I'm sure it's really playing on a lot of people's emotions, especially people who are currently invested in NIO. Now, if you guys haven't been keeping up super close with NIO, you're probably wondering why their stock is actually trading higher today. And like I mentioned earlier, this is due to their first quarter deliveries being released, and they were a bit better than we expected previously. So NIO actually delivered 20,060 vehicles in the first quarter of 2021. Now this is of course ahead of their rough estimate, which was at about 19,500. And the reason NIO predicted less than 20,000 was actually because of a chip shortage, and they actually temporarily halted production last week. And just like NIO, other auto manufacturers including Ford, Tesla, Toyota, and a couple others, they've really been affected by this ongoing global shortage of automotive grade semiconductors. But even despite the production halt, which began on Monday and it's going to run through Friday, NIO was able to deliver 7,257 vehicles in March alone. And you might not think this is super impressive, but this is actually pretty impressive considering the chip shortage and everything that's going on in the world, including the pandemic. And there's also been just a lot of negative news and a lot of negative catalysts around the EV industry. And we can definitely see that when we look at the year-to-date chart of NIO and a lot of these other EV companies. They've just constantly been going down. And so these deliveries in March of 7,257, it actually beat their prior record of 7,225. Now that delivery record was set in January and they only beat it by 32, but this is still big considering the chip shortage. And it's actually a huge improvement over February because February was only somewhere around 5,000 deliveries. And that was actually due to NIO stopping production for about a week due to the Chinese New Year. So I think that was kind of expected. But to see NIO bounce back from 5,500 deliveries in February to over 7,200 in March, it shows you that there really isn't a whole lot that can stand in NIO's way. And especially with all the things going on in the world, including the chip shortage, NIO is really showing that they can weather these negative things and they can come out ahead in the end. Now, if you guys are wondering how these delivery numbers stack up against previous months and over the past year, the deliveries of 7,257 in March was actually an increase of 373% year over year. So this is comparing this March to March of 2020, and NIO delivered 2,060 vehicles in the 3 months ending in March of 2021, and this was an increase of 423% year over year. And then looking at the cumulative deliveries of the ES8, ES6, and the EC6, as of March 31st, this reached 95,701. So this is pretty big for NIO, seeing that they've actually delivered over 95,000 of these vehicles. And one thing to keep in mind is that their ET7 is actually going to be released more than likely in the beginning of 2022, and that's when people can start taking delivery of it. Now, there was rumors that it would be released in the end of 2021, but I think it's been pushed back into the first couple months of 2022. So that's only a year away before we're going to start seeing the ET7 on the road as well. Now, as of right now, the ET7 isn't really going to affect NIO's share price too much until they actually start taking delivery and putting these vehicles out on the road. But as of right now, the big thing is the chip shortage and the semiconductor manufacturing, which, like I mentioned, is affecting a lot of auto manufacturers around the world. But there's actually a company, the Taiwan Semiconductor Manufacturing, or TSM, which is the world's most valuable microchip maker, and they actually plan to end this semiconductor shortage, and they're planning to spend $100 billion in capital over the next 3 years. Now, according to a news release issued on Thursday, Taiwan Semiconductor Manufacturing is entering a period of high growth as the multi-year megatrends of 5G and HPC are expected to fuel strong demand for their semiconductor technologies in the next several years. And of course, we know that the pandemic has really accelerated digitalization in every aspect. And so we're seeing a lot more people working from home, and we're seeing a lot more use of these chips when they previously weren't as needed. So it's really putting a large strain on the technology sector and the people who are producing these semiconductor chips. And so not only is it affecting the technology side of things, but it's also affecting auto manufacturers. And that's why we've seen a lot of these auto manufacturers take a big hit in the past few months, especially since the beginning of the year. Now, TSMC has spent about $17 billion a year on average for the past few years on its plants and equipment. But the largest semiconductor makers around the globe, including TSMC, they have roughly $55 billion in capital spending in 2020. So pretty much no matter how you slice it, $100 billion is going to be a good thing for this industry. And it's really going to provide a lot more chips and a lot more semiconductors where they're really needed at this current point in time. So going back to the deliveries that NIO actually released, with this being a good thing, it's not the only thing affecting NIO's share price, and investors are also happy that a long-term response to the part shortage is currently in the works. I think if there wasn't anybody working on this shortage and there was nobody working to improve and get more chips out to these companies that need it, we probably would see these auto manufacturers and a lot of tech companies continue going down. But I think with these companies starting to realize how needed they are, this is why we're finally starting to see a lot of these tech stocks and these EV stocks start to level off. And they've definitely hit some consolidation periods, and it looks like they're starting to go back upwards. And even if they end up trading flat for a little while longer, it's not like we haven't seen exponential gains from a lot of these EV stocks. I mean, if we just take a look at the 1-year chart on NIO, they're actually still up over 1,400%. Just 1 year ago, they were trading between $2 and $3, and now they're up over $40 at this current time of recording. Now, of course, this isn't nearly as impressive as the $60 and above that we saw in January, but I think a lot of that was due in part to the people who were just hearing about NIO. And with the NIO Day event, a lot of people were piling into NIO. And then after they realized that NIO shot up very quickly, people started taking profits. And then with the chip shortage that was released, we've seen NIO, Tesla, Li Auto, and a couple other electric vehicle manufacturers. They've all dipped down and they've pulled back to some pretty attractive levels. Now, I don't want to tell you guys to buy NIO stock, but if you guys have been looking to buy into their stock and the $55, $60 price target was too high, well, to see them pull back to $40, which I don't think we're going to see in the future, we may see it for an extended period of time right now until this chip shortage gets sorted out. But once that's sorted out, I don't think we're going to see $40 from NIO ever again, especially if they can start climbing up above $70 and $75. I think unless there's something drastic that's going to affect the entire electric vehicle sector, much like this chip shortage, we're probably not going to see NIO pull back this far like we're seeing and like we've seen since the beginning of the year. Now, for those of you who made it this far into the video, I want to hear if you guys are actually still adding shares to your portfolio and you're still buying shares of NIO. I know it's kind of rough for a lot of people, especially if they bought in at $55 and $60. But if you guys have been buying around $35, $38, and $40, you really could have brought your average share price down, especially if you're still going to continue holding NIO long term. You guys know I'm not a financial advisor and I can't give you investing advice, but I think it goes without saying that it's kind of common sense that if a stock pulls back and you have cash on hand, I don't think there's any reason not to add shares and bring down your average share price. So again, let me know what you guys are doing down in the comments. And if you guys are open to sharing, let me know how many shares you own and what your average share price is. Also, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description. And when you sign up and deposit $100, you'll actually get 2 free stocks. So make sure you guys get your free stocks while it still lasts. And if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching and I'll see you back here in the next one. Bye.